a stop loss because you're too happy to get in there and start trying to make money. So you have to first realize the risks. And before you even get to that stage of knowing when to buy and when to sell, or even stop losses, because they're pretty easy. The very thing that you're afraid of the most, placing stop loss and controlling the risk, that's the easiest thing. That's the easiest thing to do. And you can tell, and I was guilty of this in the beginning too. As a 20-year-old, I was afraid to place a stop loss because I was afraid I'd be wrong. I was afraid they would stop me out. And at the time, I didn't think of a collective day, doing the air quotations with that. I just figured that the market would just come back and get my stop and then run without it. And I didn't even have enough experience at the time to warrant that fear. But it just goes to show that that's what we're afraid of. We're afraid of being wrong. We're afraid of being wrong. We're afraid of losing money. As an investor, as an entrepreneur, as a trader, you got to warm up to the idea that you're going to do it wrong. The market will sometimes just be stupid and do something that you did not expect. Okay? And that might incur a loss. So the bias on a marketplace, that's very simply, are you bullish or bearish? Now you can be bullish or bearish on the daily chart, the weekly chart, and have a very long-term or intermediate-term bias. I'm bullish on gold. I'm bullish on equities. I'm bullish on whatever currency you're interested in. But for what time frame are you bullish? Because I could be bullish for 10 minutes trading in a 15-second chart, but inside of a long-term macro bearish market, and I can trade profitably doing that. So many of you are so rushed to try to get into something.
All right, guys.
You're not giving yourself the adequate time to learn.
Guys. So let me know if you can
how
hear
to
me.
Trust a bias.
In the chat.
And then moving past that to where the rubber meets the road is narrative. See, bias is rather simplistic. You arrive at that on the weekly chart. You arrive at that on the weekly chart.
Give me a 5 by 5 if you can hear me in the chat.
Is the market going to go higher?
Let's go.
To an old pool of liquidity, an old relative equal high, two highs that are real close proximity to one another.
Let's go.
And the most recent one being slightly lower than the previous. That's like king. That's where all the retail traders are going to feel real safe if they can short.
Give me a 5 by 5
placing their stop loss just above that.
Me.
So I teach you to try to reach for that. And that is simply cut and dry, as easy as you can get for a bias. Whatever time frame that exists on the relative equal highs, that's the time frame that you're bullish. Does not mean you won't have down candles. It doesn't mean you won't have down days in between where it is right now and when it gets there. But all too many times, traders see a down day when it's unlikely bullish.
All right, so you guys can hear me. Is it loud and clear?
I'm about to list through everything out there because it probably just reversed because we got down, it closed down 150 minutes. That doesn't mean anything if it's solid.
How's the audio,
have any, I guess, bearing on what you believe is bullish on that time frame. In fact,
all right,
it's good that there's down days in higher time frame charts like that, because that's how order blocks are.
But you guys are not answering me on Discord. You're not even
reacting to the message announcement. And it comes back and touches its opening price. And you have a change in state delivery for the short term, but it's already been bullish. You see how quickly a neophyte, someone new, can get lost in the time frames and feel like, I don't know what I'm doing. The sands of time are just carrying me here and there, and I don't know what I'm doing. Why is ICT calling it bullish? Why is he looking
for guys, if you can hear me well, just spam good, audio good, audio good, audio good, audio good, so we can start. Come on, let's go.
Narrative. See, it's not enough to know that it's likely to go up.
Just type audio good.
It's not likely to go straight up every single day when you're bullish.
If you guys can hear me.
That is unreasonable.
If you guys can hear me well, just type audio good. Then we can start. We can hear you, but ICT is too loud in the background.
Far less.
All right, let's switch the guy off. ICT. All right, ICT is out of the way. ICT is now out of the way. Okay. So let me switch this thing off so that the sound quality can be great. Okay, guys. I think we are good. I think we're good now. So let's begin. I think we're good. I see audio goat. I said audio good, not audio goat. Nonetheless, it's okay, guys. Let's begin our today's session. All right. So we're backtesting the $1 million model. Well, I won't be explaining what the $1 million model is to the T because I've already sent a video on Discord explaining exactly what the model is. You guys should now know what the $1 million model is. I'm still gonna give out a PDF to my Discord members, and it's gonna be sold to anyone on other platforms, you know, besides my Discord. So if you're a Discord member, it's a gift from me to you. It's gonna be free for you to you guys, or at least to some of you people who are already on my Discord. So right now I have about 478 members on my Discord right now. Those people are gonna get the model for free. But if you are not there before the end of today or this week, you are definitely gonna have to pay for the PDF. And you guys, please, don't give these guys out. Don't give out the PDF for free to these, I mean, to your friends and whatnot. They must come join us and, you know, study, be part of our community, because we're trying to build profitable traders who actually are in the know, that know how to do this, that are, you know, passionate. And yeah, just before we start, how's my background music now? Is it not too loud for you guys? I think we're good. Unfortunately, not a member of this. How can one be one? Bro, the link is on the bio. The link is on the bio to my socials, to my Discord. You just click on the first, you register, download Discord, register, and then you click the link on my bio. That's how you'll find my server, and that's how you become part of the community. And when you get there, just say, I'm from the live session, GM Saikido, GM to the members, let's fucking go. And then we will welcome you with the PDF, $1 million model PDF. All right, so I won't be explaining, we're just gonna go straight to it. Obviously, I'm teaching you guys how to backtest, you know, the proper way, the professional way. You know, I always do things professionally, right? So the first thing is, let's pick any month of let's say March. Let's say we're backtesting March, okay? Forex Factory. Okay, we need to understand exactly what transpired. I mean, we need to obviously get the calendar for the whole month. Background music is okay. All right, let's go. All right, so we're gonna go to Forex Factory. So basically I have a tab here for I've already actually backtested. I don't know which month this was, and these are the results from that month. I actually started with like $10,000, and then obviously after the win rate was 66.67%. After 18 trades, 12 wins, 6 losses. I say 6 mistakes, and the total profit was 280,000. Actually, the balance, including the initial starting balance, which was 10,000, was then 290. You know, 290 .735. Obviously, that's in that. And here this is winners and losses. Obviously, I was targeting a 1:3. Nothing much. Not so well, bro. Can we jump onto Discord? You guys can't hear me well. I'm getting a message. I'm getting a message from Discord. They're saying the audio is not too good. Cat is saying audio is not too good on Discord. Can you guys hear me well? You guys let me know. I'm waiting for your messages. Can you guys hear me well? Is the audio good? Is the audio bad? Is the audio good? Cat on Discord is telling me the audio is good on my side. Audio is okay. I can hear it. The audio is good now, bro. I think Cat is the only one having a problem. Then all right. So let's just continue with this. It's good. It must be on his or her side. The audio is better. It's even better. Okay. But the stream keeps pausing. No, the stream is I just paused the stream because obviously I thought we were having an audio problem there. All right, guys. So let's continue, guys. So keep me updated on Discord. I'm watching my Discord. I'm watching my chat on YouTube. So you guys, if there's any problems, you just type spam the problem. If the audio paused or the video paused, anything, just let me know. All right. All right. So this was I don't know which month this was, but yeah, the win rate was quite good. So we went to backtest one of the months again this year, and um let's see how the model printed. Let's go back, not June 2023, man. Let's go to 2025 July, no, June, March, May, April. Which one should we take, guys? Which one should we take? Should we take March or should we take April? Let's take April. Let's get the whole month of April. Okay, so obviously you guys know that if you're part of my Discord, you know that I don't trade days prior NFP. So that's why I'm checking the calendar. I don't trade days prior CPI. I am very cautious if I do. I don't trade on bank holidays. So that's why we need to check the calendar, and also you need to understand because the Tudor swing is obviously at 8:30 on CPI days, NFP days, you know, on a red folder. If we have a red folder news at 8:30, you are most likely gonna get the Tudor swing at 8:30. On any other day, well, you can still find the Tudor swing at 8:30, even there is no red folder news event, but you need to study the 850 macro. Then that's what you're gonna be. That's what you're gonna trade. So we have our calendar now. We can begin, but before we do, let me switch off this. Okay, maybe I'm gonna be tweeting some of the stats here while we are at it. All right, so here I have funding peeps. I also have FTMO. I just want to go back here. You can obviously you can do your own math. Let's say for example you're buying 100k funding peeps profile account. The profit target for phase one is 8%. For phase two is 5%, and then you get the funded account, right? So the maximum loss you can work around with that. Now the account size, you are basically trading 8,000, but you're not supposed to lose 5,000 per day, right? I mean, sorry, you are basically trading the maximum loss, daily loss is 5%. So you're basically trading 5,000 USD every day, right? The maximum loss is 10%. So you have 10,000 to try to play around with, and you're not supposed to lose 5,000 per day, which is obviously 5%. So with that, you can just say, with the model that I'm going to be showing you guys, you have 2 bullets per day, 2. So it means you have your first bullet after the 8:30 sweep, or the 9:30, and then the second bullet will be after the 9:30 sweep. Or maybe you say 850 macro, then the next bullet will come at the 950 macro or the silver bullet hour. You get your second bullet. You know, depends on what price action is giving you. All right. So, and you're not allowed to lose 5,000 with both bullets. I would say if you have 10,000 as obviously if you're trading a 100k account, it means you're trading a 10,000 account. You can risk 1,000 per trade, 1,000 or 500 USD. 1,000 is actually a bit aggressive. You can even risk like $350 per trade, or you can risk like $500 per trade, and that means you have 1,000 to risk per day. You're aiming for a 1:3. So if you're risking let's say 1,000 in one trade, you are saying I'm gonna only take one trade a day and I'm gonna risk 1,000. It means for 1:3, you're gonna, for every 1,000 you're risking, you're gonna make 3,000, right? And you need how much? You just need 8%, which is 8,000 to pass. So basically you need like 3 trades, actually 2 point something trades. It was going to be 369. Let's say 3 trades that to pass the prop firm, right? And then you need like 2 trades to pass the second phase doing the same thing. So you can do your math. I like the 10 trades in a row. I'll never lose 10 trades in a row. So whatever account that I have, if I'm gonna be trading a prop firm account, if I want to be conservative, put it on my trading, on the normal trading plan that I have, I can just say 10,000 divided by 10, and then I get how much I'm going to be risking per trade, and that's it. I know whatever happens, I'm not going to lose the account. You know what I'm saying? Because I'm never going to lose more 10 trades in a row ever, you know, unless maybe something goes wrong with me in my head. So you can do the same thing with an FTMO account. Basically, I just taught you risk management right there. Boom. All right, so I'm going to be using, like, for example, a 3,000. Okay, now let's get on to actually the back testing session. All right, so we have our calendar here. I'm going to be tweeting some things here, maybe some stats, you know, mid the session. And then yeah, let's create a session. So you go, this is actually I did not complete this with the win rate here, which is obviously the win rate here is good also. But before I do that, I'm also going to include something here on the stream which you guys must pay attention to. I want you guys to check this thing out here. The win rate is very important, very much important. So with the strategy that we're going to be using, this is very important. Wait, let me let's put this here. Okay, I want to put this somewhere here on the screen. So this win rate here, you guys let me know if you can see the win rate. Let me know if you can see the win rate, guys. So this thing here is so with the results that we're gonna get, obviously backtesting the model, we need to check what win rate, I mean what risk to reward ratio is going to be favorable for us to be profitable. All right. So if you look at the top is the percentage, the win rate percentage from 20% to 60. Then if you look at the y-axis, you see that the risk to reward ratios for a 1:1, you need to be having a strike rate of 60% to be profitable. If you have a 50%, you are at break even. I'm not gonna talk about not profitable. If you have 40%, you're not profitable. So let's look at the win rate of 40% with a 1:2. So you are profitable if you have a win rate of 40% with the 1:2 risk to reward ratio. But once you hit a 30% win rate with the 1:2, you are definitely not going to be profitable. You're losing that account. So with the 1:3 that we are going to be employing on this model, we need a 30% win rate for us to be profitable with the strategy. So if we have a 50% win rate, we are very profitable. And if we have a 60%, we are going to be extremely profitable with the 1:3. So we are going to begin our session with I don't know if you guys can see the win rate, a screenshot that I have on my stream here. I don't know if you guys can see it. Let me know if you can see the win rate so you can proceed. All right, so we need just a 30% win rate with the model, and then we are going to be profitable. So we're going to backtest 1 full month with the strategy, and that's it. So you guys, I'm not gonna again dwell much on what the strategy, how to analyze using the strategy and all of that. I'm just gonna go straight to it. Let's begin. Let's create a session. The name of the session is gonna be the $1 million, model, and then we are gonna start with, let's start with 3,000 US dollars. Okay, and then you can, the assets is gold, and we are starting at we want to study the June, not June, April. We said we are starting at 1st of April, and then you're gonna end at we are finishing at the 30th of April. So let's create the session, guys. There we go. We have the session now. Let's click to it. Let's go to charts. Let's do our thing. All right, guys. So 1st of April. Let's look at the first week of April here. First week of April. On the 1st of April, we have 10 o'clock news. So let's see if we found a trade, maybe a silver bullet trade on the 1st of April. Obviously, we are trading an NFP week, which means we have to be very cautious. But the Mondays of NFP week, once we open at 9:30, we just, we deliver immediately. All right, so make sure here you're New York time, as I am here. This is New York time. So let me make this full screen. Boom, there we go. So we are going to start at that's crazy, only 30%. Yeah, but you guys, did you guys see the win rate screenshot? Just let me know. Okay, so let me not waste any time. I don't want this session to be long. All right, so this is the model. I'm just gonna highlight it quickly here. This is the model that we'll be employing, guys. All right, so we will be employing a $1 million model, and this is, we have two scenarios, the continuation scenario and the reversal scenario. We're going to study the New York pre-market range from 7 o'clock all the way to 9:30, but the jitter swing is going to occur either at 8:30 or 9:30. So we're going to be studying the macros that follow after each jitter swing. So the starting balance here is 3,000. Let's see after a month of trading the model how much you're going to make here, if you're going to lose the account or if you're going to make some profit with the model. So we have two scenarios: the continuation scenario and the obviously the reversal scenario. So we have a reversal scenario for buy. We have a continuation scenario for buy or bullish scenarios. We have also both scenarios for bearish markets as well. So we have a bearish reversal scenario, and we also have a bearish continuation scenario. So how do you know if you're going to have a bearish continuation scenario or a bullish continuation scenario? But for example, let's start with a bearish continuation scenario. So a bearish continuation scenario, you'll see that it's going to have an intermediate term high. This is an intermediate term high. Once we break structure here, this high usually does not go above that. So that's a break in market structure. Actually, it's a bearish market structure shift, and this will occur at 7 o'clock. We're going to open at 7, create a high, then take out that high, and this is most likely going to occur before the 7:30 a.m. New York time, and then it's going to run lower, create low resistance liquidity run before 8:30 opening here, and then once it opens at 8:30, it's going to find an imbalance here at the premium of this range, which is the pre-market, and then it's going to refer to a fair value gap, or it's going to sweep a new high here and then fill an imbalance here and then give a bearish market structure shift here. Now this is going to occur at post 8:30, and then it's going to either give you a bearish market structure shift or a change in the state of delivery, and then it's going to continue to the downside. That's a bearish continuation scenario. I have a video on my YouTube channel. I know only Discord members have access to this YouTube because it's private. So yes, we saw the win rate screenshot. All right, perfect. So this actually is the bearish continuation scenario, and everything is vice versa for a bullish continuation scenario. So I'm not gonna explain it to you guys. Let me stop recording here. I don't know why it's recording, because I'm gonna save this live for later. And then this is a bearish reversal. I mean, this is a bullish reversal scenario. Okay, we're going to have 7 o'clock open, create relatively equal high. That this high is going to be slightly lower than this one, and that's going to run lower before it opens at 8:30. It's going to create new low resistance liquidity run, a higher low than that one on the left, creating relatively equal lows, and then it's going to open at 8:30 and sweep this low, and then sweep the low that will be newly created post 8:30, give a bullish market structure shift, then it's going to go towards these relatively equal highs. So that is a bullish reversal scenario. Everything is vice versa for a bearish continuation scenario. So I'm just going to give you a quick 8:30 will open, sweep the high, bearish market structure shift. So this will occur 7 o'clock opens, creates, it could be relatively equal lows or a single low, but I like more this when it has this relatively equal lows. And then sweep the high, bearish market structure shift during the 850 macro, and the judo swing will come after 8:30 because that's when the algo goes back online. So the judo swing will either be at 8:30 or it'll be at 9:30. So how do we know? We mostly rely on the forex effect, the calendar, which is the roadmap for the for the week or the day. So I'm not using a paid FX replay here. This is a free version. I'm not going to be able, some days maybe we're going to skip some trades, but we're going to go back and check if the model delivered. All right, so we are starting here at 3:11 p.m. So we need to go to 8:30 because that's when you are we look for a trade between 8:30 and 11:15 New York time, obviously. So 8:30 a.m. Let's jump. I'm looking down here. I'm gonna pause it. Oh, okay, we just skip the first day here. That's okay. Let's go to the next day. But before we do, let's go back and check because we just skipped the trade for the 1st of April. Let's go to the second day. We have 8:15 news, and I'm gonna be a bit aggressive with this the model because I believe in it. Okay, so I'm gonna be risking 20% of my capital per trade, and let's see if we are going to blow the account in the first 5 trades or not. Wednesday, 2nd of April. Obviously, this day it's a day prior. It's not a day prior NFP. NFP is here, so yes, I'll trade this day. Okay, let's go. Let's jump to 8:30, 8 o'clock hour. I'm gonna be very quick. So, okay, paused it. Let's go to 1 hour now. We are now at 4, so I don't want to go. I don't want to jump with 4-hour intervals. I want to use 1 hour intervals now. Okay, now we are at 6. Want to check 7. Okay, let's go to 8. 8. Actually, this is gonna be a trick now. Let's use 15 minutes to jump. 7:15. 15 minutes. 7:30. We let that play out. Let's go to 8:30. There we go. 8. Let's use 10 minutes now. Oh yeah, there we go. Now we are at 8:30. All right, so we stop here. Let's study the pre-market range. The pre-market range, guys. I'm not gonna do much on the. I'm not gonna explain what the model is again because we are not here for that. You already know what the model is if you're on my Discord. So we're just here to backtest the model. Okay, we look for, obviously this looks like a reversal scenario forming. We have relatively equal highs here. We're just waiting for a judo swing at 8:30 and look up here. Okay, let's wait for it. Let's check 15 minutes, how 15 minutes look like. And obviously we need to as well, we are on a downtrend here. So let's see if we're gonna, let's see if the model is gonna give us something, right? And let's check 1 hour again. Okay, it looks like we do have an imbalance that we can trade up into. Let's go back to 1 minute. So now we're going to play this and we are now analyzing the market. we do have a Judas swing. Obviously, this is what you pay attention to. You check the pre-market range highs, the pre-market range lows. You want to see one side it gets swept first, and then you trade. If once you see a bullish market structure shift or maybe a change in state of delivery, but you need a Judas swing at 8:30, which is what you are seeing here, to clear one of the lows here for a reversal. I just showed you it could either be a single low or relatively equal. So this looks like a bullish reversal scenario for the model. And obviously we have our 8:30 opening price here, which is very important because this tells you that you are at premium if the market is below. There's a premium for a session. If you're trading below the 8:30 opening price, you're at premium for the session. And it's even I mean, sorry, not premium, yeah, discount for the session. What am I saying? So this is gonna tell you this is a session power of 3. We're using this for like a session power of 3 kind of a scenario. I'm trying by all means not to go deeper into this. I want to simplify this as much as possible. So, and it's even worse if we have also the midnight open above price, so looking down here, oh, it looks like we have our midnight open. Obviously midnight open, because you're looking at the midnight opening price is also above market price somewhere here. I'm not gonna be, because I'm looking down here, so the midnight opening price is above, so we are extremely having discounted prices here. Let's check. We have a Judas swing here, so we have 2 ticks below 8:30 opening price. We have relatively equal highs, and also those 3 ticks. So those are the check marks that you have. There we go. So now I'm looking at this, I'm watching this. Okay, there we go. I need to make these my favorites, man. I need to make this my favorite. I need to make this my favorite, this my favorite. I also need to make the text my favorite. Price not my favorite. There we go. So all right, so I'm watching the opening price Judas swing. We have a fair value gap here. We just swapped it. Okay, now we have this fair value gap here. I want to see if we can invert this fair value gap. There we go. Okay, there we go. So now we have an inversion fair value gap. I'm watching time now. We just closed above it, and we also closed above this guy, giving us a bullish change in the state of delivery. Okay, now this qualifies my trade. All right, we are going into the macro, which is 8:50. Let's look at the hard time frame again. I'd like to check the 15-minute, 5-minute, and okay, we just swapped the 5-minute low. We are inverting a 5-minute fair value gap as well. The 1-minute has a bullish change in the state of delivery. This is a change in the state of delivery, guys. I'm not going to be annotating and typing these things out. I'm just going to call them out by their names, and then boom. Now I'm having my first long position. I'm taking stop loss below the low here. I'm aiming for 1:3. If the trade gives me anything like, if it gives me something like a 2R nyana, and I have a high conviction, I'm going to take it, even if it's not a 1:3. So I'm placing a trade. I'm risking 20% of my current balance. So I'm risking 600. I'm going to make 1,700. Obviously, I'm going to be taking partials here. So I'm buying. I'm going to save this position. Now I have a trade that's running. Guys, you have to click the long indicator and then click a place buy so that the trade will be triggered, and then you save it. So we're in a trade now. Let's see how this gonna go. Let's go. Boom. Okay, beautiful. It looks beautiful. So this is taking too long, guys, but I like it. Oops. Okay, that's not good. Let's pause it right there. Now, how do you feel? Do you close the trade? We have 2 bullets, guys. We have 2 bullets for the day, all right? So we don't move your stop loss. It could be retesting the inversion fair value gap, okay? Let's see how it happens. Let's see if we're going to take a loss or not. Boom, that looks like a loss, bro. I'm not going to lie. It looks like a loss. There we go. We took our first hit. You take that, you screenshot it, you post it, you thingy, you save it on your Notion. And already I can see that we failed to close above the opening price at 8:30. The 5 minute. Let's check the 5 minute. Okay, we were actually too early to buy this. We still have last bullet of the day. I want to check if we did not even reach premium. One of those days you take an L, man. You take a it's a lesson for the day, right? I was gonna take this even I don't think. Let me see the hard time frame. 15 minutes. Do you check it? I was gonna take this even if I was trading it live today, bro. I was gonna take this and take a hit, bro. But it's fine. Let's keep it moving. Let's check if 930 is gonna give us something. Boom, 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 boom. Again, okay. We are inside the macro. So the macro, this macro here, took us out. All right. This is a 850. This is a 850 to 910 macro, right? Looking at this macro here, it gave the manipulation low. It looks like it's about to print something here. Oops. Now it's giving us another bullish market structure shift. I have the last bullets for the day. The macro did us dirty here, sweeping the 830 lows. Now I want to go in again. Let me see if this is what ratio is going to give me if I go in right there. 2.56. Okay, guys, I'm placing the buy here. Let me delete the first order. I'm going in. I'm going in. I'm going in, boys. Let's go. Oops. 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 Looks like you're gonna take another hit. Let's see. Okay, that's good. That's good. Oops. Guys, do you think type in the chat if you think this is gonna be a win? Let's go. Oh shit. Oh damn. Okay, let's take some partials. Wait. We are currently in we've just recovered the first loss. 700 US dollars in profit. Now, where is our entry? Move your stop loss to break even. Let's move stop loss to break even. Take some partials. Yeah, wait, before we do, let's take some partials. Wait, what happened here? Take 50% off. Save it. Let's let it play. Let's recover, man. Let's recover. We're in profit. Pay the trader. Let's go. This looks promising. Okay, spending too much time. Now I'm watching if it should it close below this BC here. I'm gonna kill it. I'm gonna kill it. We just gotta close there. You know what? Go to hell, brother. Let's take this and be out. Bang. You need. Let's watch it. Let's see if it delivered. Oh damn, bro. Damn, bro. Great trade management. You journal this thing. Great trade management. We paid the trader. This BC here was violated. We closed below it there. We had an order block which was respected below the BC. You can even, I think this was a good inversion family gap here. Retested right there. Premium, boom, and then it delivered. Okay, so this is the model, all right? Obviously, my entry price here was not too good. Could have waited for a retracement here, and then because that was going to give us a 5R. Imagine, bro, risking 20%, but we just recovered the loss, so it's a 1-1. The score is 1-1. Let's go back to the forest calendar and check if we're going to trade the next day. What is the next day again? Excuse me. We are on the 3rd, so the following day was the 4th of April. What's happening there? We have NFP. Bro, we were trading a day prior NFP and I was not aware. Damn. That's a huge mistake, right? But we did have a red folder news event, right? We did. But I usually trade with caution there. I don't just jump into trades. So that's why we took a loss. Lesson. The L was for the lesson. All right, so let's go back. Let's jump again. Go back to the following day at 8:30. I'm watching down here. I'm gonna pause this. Now let's pause it right there. Go to 1 hour. So the model delivered. Right. Let's go to 6 or 7. Okay. Let's. Oh shit! Damn, bro. I just skipped it. I just skipped. Oh, we skipped. We missed it, guys. We missed it, guys. So this day we have NFP. Oh, we missed it. You see, we are now at 9 o'clock. Hopefully, we're gonna find the trade post 9:30 because we can't rewind this. You can't put it back, guys. So let's check if the trade has already occurred. Looking from 7 o'clock. Oops, we have 7 o'clock. We have 8:30. Okay, so what scenario is this? Looking at the 7 o'clock, we just opened, rallied, created a high, and then went lower to the swing at 8:30. Now we have the opening price here at 8:30, and the midnight opening price is somewhere above price, if I'm not mistaken. Boom, 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 boom. Yes, it is. It's somewhere here. So it's somewhere here around the 8:30 opening price. I'm not gonna point it out. So let's see if what the 9, because now we are inside the macro right now, which is the 850 to 910 macro. Let's see what it's gonna do. See if it's gonna put in a bullish order flow. All right, guys. So looking at this, we are below the 8:30 opening price. Obviously, I'm looking at least at the premium of this range here. What do we have? We have relatively equal highs there. Let's see if we can find something that's going to take us to at least the relatively equal highs up there, because the model suggests. Okay, so right now we have sell side swept here. The pre-market range highs. Actually, let me do this. We have the pre-market range highs here. Pre-market range highs. We have pre-market range lows here. We haven't opened for 9:30, so I'm taking this as a pre-market range lows. But this also is sell side liquidity. So we are below the pre-market range lows, and we have sell side liquidity swept right there. Now this is a bullish change in the state of delivery, but I don't want to go long yet because we still have this unfilled imbalance up here. I would like to get a strong close above it before I entertain longs. Oops. Okay. Now, what happened? This thing just paused. It looks like we just respected this BC here. Right there, institutional order flow entry tool. I want to see a strong close above here. Okay, we are respecting that guy. Boom. We just closed above the C. Did we? Not really, did we? Not really. So I want to look at the 15 minutes to check if I would be confident buying this. What happened here? Let's watch this. So okay, what happened here? So we opened, ran the highs. We are in a bearish market structure shift. This looks bearish, man, and we just inside the imbalance here. Let's see if this is gonna, because we just closed above the, so I'm checking for my confirmations here for going long. We just closed above this guy. That's a change in the state of delivery right there, a bigger one, an even bigger one, which is good. We just need a close above here. Then you can target anything, maybe these relatively equal highs. Do you have relatively equal highs here at premium? Not really. We filled that imbalance right there. We have another small imbalance here that we can target. We don't need to take it all the way up there, because if you look here, this could be a continuation to the downside. That's my thing, because I'm looking at this. Where is this thing now? This, I'm looking at this. Where is this thing? I think it's here. Let me add it to my favorites. The pad. I'm looking at it. It looks like you're having this type of a scenario here. High swept, bearish market structure shift, relatively equal lows, and then it looks like we're going to have this type of scenario, because looking at the high here at 7 o'clock, it was swept and then drop a huge drop. Looking at the 15-minute, this definitely looks like a continuation scenario. It's just that if we are going to continue, we need to obviously price into the premium of this guy here post 8:30, and then you can start moving low. So that's the continuation scenario. So let me look at this and see if okay, that's a strong close. Now if I go in here, my stop loss will have to be somewhere tight for me to get a 3R or a 3R somewhere here. But I'm not confident in this trade, guys. Don't want to lie. I don't like the momentum. Let me just watch it. Let me not take this one. But let's see if it's gonna, because it looks like a continuation scenario. So if it's a continuation scenario, I would want to be short, obviously. Now we have a fair value gap, a retest of the inversion fair value gap. Spending too much time here. Don't like that. No. Obviously, I'll be regretting it. So let's see if 8:30, 9:30 is going to give us something. I like the sweep. Okay, there we go. Now we have this sweep of pre-market range lows. All of them have been swept. Now I am more confident in this trade. Should it give us a bullish change in the state of delivery? Spending too much time. Again, guys, a bullish change in state of delivery would have to be a candle close above this guy. So we are not getting that. A body close above this guy. This is an 8:30 opening price. So let's see. It looks like a trending day today. Looks like it wants to push low. So you don't have a trade until 11. If you don't find a trade until 11 o'clock or 11 minutes past 11, then we're not going to participate in this move low. Okay, this looks bearish. Let's try and okay, there we go. So we have the opening price here at 9:30. 9:30 opening price is somewhere here. Okay, so now looking at this range from 7 o'clock to 9:30, the premium of this range is somewhere here, and also the premium of this dealing range that we are currently on is somewhere above here. So I can get a trade now. This is a nice bullish market structure shift here, not once but twice. Bullish breaker. I can go long here, stop loss below here, and target the premium, which is the relatively equal highs here, which is also the thingy. Then place my order, save it, because I'm still trading. Now I'm trading a silver bullet, taking it to this high at premium. This I can take. Oops, it looks like it's very bearish, guys. Very bearish. Okay, I'm not going to entertain this now. This looks beautiful, but I'm done for the day. So we are currently at a loss of like $500. Let's fast track it and look at how things transpired. Okay, so it was just a trending day. No, so I'm strictly backtesting the model and not the. I don't care about the bias. I don't care about what the bias was that day. I am strictly focusing on the model. Okay, to make things even easier and quick. So let's go to the next day. We are testing the win rate of the model, not the bias, nothing else, just the model. There we go. Oops. Let's not skip the following day, guys. Okay. Let's put 1 hour here. 6, 7, 8. Okay, there we go. 5 minutes. Okay, let's go to 8:30. One more time. Okay, now we have our range, pre-market range, 7 o'clock. What's happening? Oops. This looks like a continuation scenario. Okay, we have 7 o'clock somewhere here. Okay, 7 o'clock. We have 8:30. All right, so this looks like a continuation scenario. We have, did the highs get swept before 7:30? No, it was after 7:30. Okay, let's look at the 15-minute. The 8:30 opening price is somewhere here. So this looks like a Judas swing. We can find a trade going up because we are at discount right now. 1 hour. Let's look at 1 hour quickly. Come on. So 1 hour looks like there's a change in the state of the bullish, and we are trading below. We have an imbalance in the sell side delivery right there. 15 minutes. I'm not gonna go to daily. 15 minutes looks better. Bullish, kind of bullish. What do we have here? An imbalance above relatively equal highs and an imbalance, small imbalance. And you have a bullish market structure shift kind of scenario here. We're trading. We have this imbalance, and then let's look at the 1 minute. I can actually take a retracement here to the upside. Let's study the macro. We're studying the next macro here. That's a change in the state of delivery. We just missed this. So let's wait. Oh, damn. We missed it. Oh, I missed it, guys. That was too quick. Okay, now we are at premium of this range here. Let's see if you're gonna get something taking it low, because this definitely looks like a continuation scenario. So, you know, this kind of a vibe, and then it opens, it sweeps before it takes it low. So we have that kind of a vibe here. Let's study the macro, and this was too quick, but this was also a trade to at least this at the premium of this range and these relatively equal highs, but we still have a short here. Let's look at the, so you guys, I'm watching the fair value gap. If this gets swept, and we are now at premium, so I told you about the new market structure. Okay, we already have this. So we are trading at premium. What did we do? We just took buy side liquidity right there. What time? 8:55. This is now inside the 850 macro. So we want to check a change in the state of delivery kind of a situation here, or a bearish market structure shift. And then you're going to go for, so this is the macro. The macro has buy side here, and we just closed bearish below that candles. Down close candle that has buy side. So that's a bearish market structure shift, but I'm going to be studying this guy. Once we invert this, I'm going to go short. Okay, we just swept the highs again. Now I'm studying if we get a body close above these highs, yes or no. This is a macro. We are inside the macro. I'm watching this time frame here. Let me type it. You can type it out. So this is very important, guys. Let's remove the border. And I want to see if this will be an inversion fair value gap. That's the only time I'm going to go short there. Okay. Okay, now we do have a confirmation of going short. Now let's check what what other PDRs do we have at discount of this? We have these relatively equal lows here and this imbalance. I can aim for this to check if I can get a 3R if I aim this sell side here. We just swept the highs. We just swept the buy side liquidity right here. We swept buy side liquidity on 15 minutes. The order flow is bearish, so this is a high probability. I'm gonna aim for a larger pool of liquidity below my low market price. So let's see. We have the high. Let's see, because we have a fair value gap here. Let's take our 1:3 serious. 1:3. It's within, still within the target here. So let's place this order. Save. Let's go to 15 minutes. Check if what we are targeting is to, oh yeah, this is the imbalance I'm looking at discount, guys. This PC, this fair value gap here. So our target is within, is actually above that, so the trade is valid. The 1:3 is valid. Now guys, if you're a 1:3 trader, it does not mean that you must blindly aim for a 1:3. You must always, it must always be within within your target, within the pool of liquidity or point of interest. Okay, let's go. Inversion fair value gap retest. I like the closing price right there. That's a beautiful BSC again. I like the closing price. This looks beautiful. Oops, this BSC is sending it higher now. Again, one more time. Let's study the inversion. Oh, I like the closing price there. Again, that's beautiful. That's nice. I can roll over my stop losses now. That's a beautiful delivery, guys. Now you screenshot this and you save it. Beautiful. This is beautiful. Okay, let's back test again the following day. Let's go on. Now we're going to know the balance. We have a profit of 943 now. I think this is still the first week. Let's go back and check the following day. What date? Oh, it was Monday of no news event. So you saw how the macros are important, because I always tell people that if you're trading on a Monday with no news event, you must trade focus on the macros, because they're gonna give you, they tell you the story, and that's what happened. So let's look at Tuesday. We have President Trump speaking. No red folder news again, so we're gonna focus on the macros. 850 macro as well. It's gonna be very important for us. So let's go to 8:30. Stop it right there. Play it one more time and stop it. Now we are at 8 o'clock. Let's go to 15 minutes. Okay, stop it there. This is 8:30 opening price. Again, let's mark out our range. This looks like we have relatively equal highs here, very clean highs. Okay, now 7 o'clock. Wait, 7 o'clock. 7 o'clock. All right. And then 8:30, we're about to open for 8:30. Let's see. Okay, so we need to see it take out at least this low here, because this is a pre-market range low. We can't just buy now because it's 8:30. If it decides to rally from here, we're not gonna take that. It needs to sweep the pre-market range low, this low specifically. That's a Judas swing. So if it's gonna go all the way up, then I'm not gonna take it. I'm just gonna wait for it to create the range. Obviously this is the opening price at 8:30, so I need to see that Judas swing lower. So people, this is where people get trailed out, because they see the fair value gap here and they think 8:30 is going to start spooling. It's not going to happen, my brother. This family gap is being respected. We just swept the pre-market range lows. Now I'm looking for a bullish market structure shift or a bullish change in the state of delivery. That's going to take me higher. And we also have a family gap here, which will also be playing a very huge role in my execution because I need for it to be inverted. Three things must agree. All right, so now we do have a bullish change in the state of delivery. Pre-market range low has been, so first thing is pre-market range sell side liquidity has been swept. Bullish change in the state of delivery. Three things. I need this inversion family gap to be inverted. It's not yet an inversion family gap, but I'm not going to go in until this is inverted. Again, I'm selling, I'm buying, I'm looking for buys below the 830 opening price. I like these relatively equal highs. There's a small sweep here, but this is still a draw to me because they were doing that just to, you know, drop low and make sure that these guys are not attending. But this high is still high probability looking at the bodies here. The wicks are caps. So should I get it close? There we go. I'm gonna pause it right there. I'm going in here. Looking at the time, this is the macro. This is a high probability to me. You remember I told you that we are trading on a no news event. So we are relying on the macros. So everything is aligning well. If we take a loss here, we take it with pride. All right. So this is a macro, 850 to 910 macro. We're gonna go back and check the calendar. We are here, guys. This is Tuesday, April 8th. We are relying on the macro, guys, because we don't have news event, so you can't just sweep occurred during the macro here. So it does the sweeping, it does everything. We're just looking for, oh, this is gonna be a 2.7R. Place the order. We are risking 20% of the balance. I don't know what's happening now. I don't know what's happening. Let's just close this tab. The trade is in now. Let's invert this. Let's go high. Oops. Oh, that was quick. Oh, okay. Let's go. Now we are in profit of 3,000. This is beautiful, guys. No news Monday. You journal like this. You say no news Monday, 850 to 910 macro delivered the $1 million model. Take this screenshot. I'm gonna copy this and paste it on Discord. I just posted it on Discord. Do you guys see this? It was a no news Monday or Tuesday. No news Tuesday. Sorry, it's a Tuesday. Made a mistake, guys. Made a mistake, but you can see it down here on the screenshot that I made a mistake. I'm human. I do make mistakes as well. So let's go on now. The second week of, we are here, right? Second week of, I'm teaching you how to backtest a model. I'm not including bias. I'm not including anything, guys. Strictly the model. Okay, so we have Wednesday. I'm not gonna trade this day, guys. It's an FOMC at 2 p.m. We also have core CPI the next day, so I skipped these kind of days. All right, let's see if the model delivered. We're not gonna trade it. We're gonna see if it was there and if it delivered. So you stick to your rules: 1 trade, 2 trades a day. You're done. Now you tell me if trading this model will not make you pass your Profam account. Another thing is did it pass? No, it's still right on time. Still right on time, guys. We are here. Okay, so if we do, let's check again. If we are trading a day price CPI and we have news at 8:30, then I trade that day. But this day here, I don't think let's remove this. I'm not gonna be tweeting. I'm just gonna post in Discord because you guys are on Discord as well. But this already looks like a continuation scenario in my eyes, because looking at this swing low, 7 o'clock, or 7 o'clock, oops, 7 o'clock, swept the low, bullish market structure shift, rally. Now looking at 8:30, let's see what is gonna, oh, there we go. Now we have the 8:30 here. Okay, let's go back. Oh, you just check the calendar. So we have the pre-market range high, we have the pre-market range low here. So looking at the low, the 7 o'clock did the sweep, which is the macro, and then bullish market structure. So I'm looking up here, and we are trading at discount. This is a discount. So once we open, you sweep this low and then give a bullish market structure shift. I would take that, honestly. There's a sweep. That's a sweep. We can even go as far as sweeping this low. It's fine. But once you get something bullish here, I think that it will be ready to deliver another sweep. Obviously, this is the 8:30 opening price right here. Very important. We are trading at a discount, and this looks like a continuation scenario forming. Now, guys, now we do have, very important, we are trading at a discount. You just made a bullish change in state of delivery, but I need more confirmation. All right, more confirmation. Let's look at the 5 minutes.